Hello, chart watchers, and welcome to this Friday, July 6th, the Market Watchers Live Show with your hosts, Tom Bowley and Aaron Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. You can see the market's gotten off to a pretty good start today after the non-farm payrolls report came out this morning. We got the Dow Jones Industrial Average currently up 122 points, the S&P 500 up 23. The NASDAQ and the Russell 2000 both outperforming again on a relative basis, especially the NASDAQ, which is up 88 points. The Russell 2000 has tacked on another 13 and is climbing closer to its all-time high. The 10-year Treasury yield continues to drift a little bit lower, though. This is a bit concerning. We'll talk about that in a minute. But the 10-year Treasury yield down about 1 basis point, 2.83%. Volatility continues to move lower. That is a good thing for the bulls, as we've got the VIX now back down around 13.5. The healthcare group breaking out above some rather big resistance at about 85.5. Huge breakout there, and really a lot of it's about the biotechs. A massive move higher in the biotechs this morning on the heels of some big news from Biogen. You can see Biogen making a big breakout, and I've also featured a few other biotech stocks that are doing really well. ARQL really struggled at about $6 off of an uptrend, making that breakout today on increasing volume. Gilead Sciences has been under a lot of pressure on a relative basis for months, but we are breaking out. Yesterday, we broke out above a key 72 level. We're continuing to tack on there. Amgen, which was featured recently as a pretty interesting stock to consider in the month of July, because biotechs do tend to perform extremely well in July, as does Amgen. And you can see Amgen up 2%, having a very strong day as well. Okay, Aaron, it's about time to head into another weekend. I know you've got some serious hot weather to contend with in California.
Yes, today's high is supposed to be 114.
Wow.
So, yes, the air conditioner will be running overtime, as everybody's will. So I'm sure we're going to have a brownout is what we call it, or a blackout, so that we're going to not have our air, because that's just the way it usually runs here in Southern California.
Well, I will say, I'll also say, speaking of hot, the blog area at StockCharts is hot, always hot. We've always got all kinds of things going on there. And I do want to point everyone to the fact that we do have a poll up today, and we'd love to hear how you use the blogs and whether or not you subscribe to them. So please check that poll out. We'd like to get some feedback there on what you do with the blogs. But anyway, so what do you got? You got plans for the weekend? Or are you just going to sit inside or maybe under a tree?
Yeah, we'll be in air conditioning or in a pool. I'm not sure which, probably a little of both to keep cool. But yes, it's I can't remember the last time I've been in 114 degree weather. Maybe last year.
Yeah, I was going to say probably about this time of year.
So yes, still taking, let's see, I'll take your 10 and 10 symbols up until quarter till at 12:45. And don't forget to like your favorite symbol requests, because the most popular is going to be number 2 in the 10 and 10.
Ah, okay. Well, I do want to say that our weather is actually supposed to be a little cooler. And actually Sunday, tomorrow, I think the high is only supposed to be 78, which is really unusual for the Charlotte area.
Nice.
But Sunday, sunny and 86. So you know where you'll find me. I'll be right on that golf course.
No doubt. I had no doubt.
All right. What do we got coming up?
All right. Next week's going to be fun. Tom, you have your workshop on Tuesday. But we do have an earnings spotlight on Monday. We just added that to the schedule, so you'll want to tune in Monday. Tom, I don't know if you've got your workshop title yet, but I'm sure if you don't, you'll take suggestions.
Yes, I'll take suggestions. There's no title yet.
All right. Tushar Shande is going to be here on Wednesday with us, and that should be great to hear about his trend meter. And then Grayson Rose is going to join us on Thursday. So it should be a jam-packed week. I'm looking forward to it. However, today, let's look at what we're going to do today. Lots of excitement. As Tom alluded to with our poll, go ahead and take that. We're going to go over blog highlights, show you some of the blogs we think you should be reading and how to use them and subscribe. Chart breakouts will follow that. 10 and 10 to 1, as I said, taking your symbol request till 12:45. Our first symbol will be Key Corp, Key, K-E-Y. And then we'll finish up with the sentiment update. I'll let you know what people are feeling and how that will affect the market coming up. So let's go ahead and get started, Tom. You mentioned some economic reports and that Treasury yield falling. So
yeah, the Treasury yield, I always like to find, watch what's going on in the bond market. I mean, it's, the stock market is, I don't know the right way to put it, but I'm going to say the stock market isn't quite as bright sometimes as the bond market. I think the bond market tends to get things right more often than stock market. So normally when you get strong economic news, you expect Treasury yields to rise. You expect money to move away from the bond market. And you can see throughout June and even today with some really strong numbers, the jobs numbers, I'm going to go over those in just a minute. But even with some strong numbers, you can see we actually moved to about a 5-6 week low on the yield. We got down as low as 2.81%. And we're only at 2.83 now. I mean, maybe we're reversing here and moving higher. But I really want to see a break back above that 20-day moving average. And I would have thought with the news today that we might have gotten that. June non-farm payrolls came in this morning, 213,000. Market was expecting 190,000. And perhaps maybe even more important and impressive, May was revised higher from 223,000 to 244,000. So really a 1-2 punch on the non-farm payrolls. June private payrolls also jumped. 202,000 versus the 182,000 expected. And May was revised about 21,000 higher in private payrolls as well. June unemployment rate actually jumped a little, so there was one negative. Did rise to 4% versus the 3.8% that was expected. But June average hourly earnings doesn't seem to be a wage inflation problem. June average hourly earnings rose just 0.2%. Market was looking for 0.3%. Yesterday afternoon, we did get the FOMC minutes out. And the one thing that I kind of took away from that is that some of the districts did acknowledge uncertainties over trade policies have delayed or are scaling back some of their capital spending plans. So some of this, I don't know. I don't really follow headline news very often because I think that it's just used for manipulation. I like to find out what's actually going on in the market, what the numbers are telling me. But I do think that there is some validity behind some of the nervousness in the market, wondering how this is all going to play out. And I think that's what I kind of took away from the FOMC minutes yesterday, is that there really are some concerns out there, and whether or not these companies are going to continue to delay their capital spending plans or scale them back. I think that could be a big thing down the road. It's worth watching. But again, it's all in the charts. We're going to watch the charts and see what they tell us. I'm still okay, although I do have, as I just mentioned, I'm a little nervous about the 10-year Treasury yield continuing to drift lower. I'd like to see that move back up above that 20-day moving average. Let's talk a little bit about the dollar. The UUP, mentioned not that long ago, we had a negative divergence. See the higher price of the UUP and the fact that we rolled over on the PPO. That was suggesting that maybe the 20-day was not going to hold and maybe we'd see a 50-day test. And you can see we are moving lower now. And I would even say that 2460 area that we saw in early June is a possibility to the downside. I'm still very bullish the dollar down the road. So I'm talking about short term here. But if you look at a weekly chart, there's room for continuing pullback on the weekly chart to get down to that rising 20-week EMA. So we're sitting right now 2483. The 20-week EMA is currently at 2439, and 2460 was that price support I just talked about. So this is going to be an interesting battle coming up on the UUP. I still believe it goes higher. I think that the U.S. rates are still continuing to move higher than foreign rates, and I think that's going to continue to put upward pressure on the dollar, which will continue to be good news for small caps as they continue to outperform the S&P 500. And also the NASDAQ has been wildly outperforming the Dow Jones over the course of 2018. And during a bull market, that's not too crazy, but the amount by which it's outperforming is pretty substantial in 2018. All right, let's take a look at the healthcare group, because healthcare leading this to the upside today. The XLV, you can see breaking out above that June high, now challenging a double top at 86 that we saw back in February and March. So that is going to be a key level. If we break out above that, I really don't see anything on the XLV until we get up to 91. A couple of news stories. ISRG which is Intuitive Surgical. The FDA granted clearance for the company's full-wristed 60-millimeter stapler. Not sure how big a news. The volume's not huge, but technically it is trying to make another breakout. ISRG was one of the stocks I think mentioned going into the month of June that this was a stock that historically did well in June. It did well in June, and it's continuing, it looks like, here in early July. And then, of course, the big news was Biogen, BIIB. They received positive results from a trial of an Alzheimer's drug being developed in conjunction with another smaller company. And you can see that this news was big. Look at the volume on this one. Very unlike what we just looked at on ISRG. Traders are taking notice here. Huge gap up. We went all the way back up and tested a major high back in January before some of the selling kicked in. Great opportunity for a trade as we hit that resistance area. I think this is good, though, for Biogen going forward. It's just a question of how far it pulls back first. When you look at some of the other areas, though, if we just look at the Dow Jones U.S. Biotech Index, for instance, this is a big breakout, taking out some prior highs. If we look at a couple of the ETFs, you got the S&P Biotech ETF, the XBI, back up, ready to challenge the high that was just established a couple weeks ago. This has been one of the better performing ETFs surrounding the biotechs. I currently own the IBB, just for disclosure. But the IBB has jumped and has taken out a couple of big levels and appears poised now to go up and challenge that January high. So a lot of good news in the healthcare space. And if we go through, I pulled up the biotechs, but if we pull up medical supplies, you'll see that this is a group that's bounced off the 50-day moving average, starting to turn back higher, which I think is great. Medical equipment, the DJUSAM, also pulling back, hitting the 50-day moving average, turning back up, ready to challenge the second week of June high that we saw a little less than a month ago. And let's even take a look at the pharmas. This has been a very weak group, but it looks like we are putting in a bottom. It looks to me like on the bottom, left shoulder, neckline, head, right side of the neckline, right shoulder, and a breakout. So pharmas look like they are improving technically. And healthcare, which is actually performing worst among the healthcare stocks or industry groups today, only up about 0.5%. And while this one, looks fairly modest, again, I think if we pull back, look at a weekly chart, you'll see this has been a very strong group. Has pulled back, put in a cup, I think has now established a handle, and a breakout above 1950 on this group would be strong. So we just went through all the industry groups in the healthcare area, and they all look pretty good to me. I would expect that healthcare is going to break out above that double top that I mentioned earlier on the XLV. Semiconductors, might as well pull them up. They have been extremely weak. June was a horrible month for semiconductors. They are turning higher. We're starting to see some strength, but we do have an overhead resistance level to test here at the 20-day moving average. We'll see if we can get through. Micron did reaffirm its Q4 revenue outlook. And so I think that has helped to alleviate some of the fears in the group. PSMT, this is a smaller company. They missed their earnings estimates for the fourth time in 5 quarters. I'm going to pull up a weekly chart here. Having a very rough day. But while the market's been in a bull market for the past couple of years, you can see this is a stock that has been wildly underperforming, unable really to go anywhere. It looked like we were trying to make a breakout, and then they once again came through with a miss on their quarterly results. And I would say it looks like probably heading back down to the 77.5, 78 area to test those recent lows. The media agencies shifting to the consumer discretionary group. Media, we talked about the 565 level. Remember how many times we tried to get through, couldn't get through? We finally did it. I think we mentioned it the day it was happening back on June 22nd. Well, we pulled back and actually tested the rising 20-day moving average with a PPO that was beginning to strengthen. After pulling back and testing that 20-day EMA, we have now broken back out and look to challenge 590, which on a weekly chart is a really big level for this group. You can see after moving lower, volume picked up last summer. The reaction highs twice came up into this 580, 590 range. So now that we've made a short-term breakout, if we can get through 590, I think media agencies are definitely a group to watch. Okay, let's take a look at a couple of the upgrades and downgrades. I'll turn it over to Aaron for that.
All right, let's get it started. I have 1 downgrade and 4 upgrades. We'll see how far we can get. I want to start with the downgrade. And as we look at these, we a lot of times look for bottom feeding opportunities. And with this downgrade, very interesting. You get the downgrade. Oh, I'm sorry, this was an upgrade. You get the upgrade. We've got the move above the 200-day EMA. I'm now seeing that 20, 50-day EMA nearly crossover, because that would give us an intermediate term trend model buy signal. The PMO looks rather overbought, but if you take this out about 5 years, we can see what the normal range is for the PMO. And we can see that it usually runs between 5 and -5 typically, or you could even go with an 8 to -8 range. So in actuality, this one is not overbought. And let's look at the weekly chart very quickly here. There we go. While this is a huge move for the week, we're looking at a 30% move. I would watch this very closely. Maybe we can get a little bit of a pullback for an opportunity here, but look at that weekly PMO is now turned up and given us a PMO buy signal. And there is certainly upside potential here. Again, with these low price stocks, I always recommend watching your position size so that price shocks don't eat you alive. So something to consider. Let's go ahead and look at the others, which are downgrades. Here we go. All right, Emergence, but it's biopharma, and ABUS, we can see it's down almost 2% on this downgrade, but notice that it did break out above some very interesting overhead resistance yesterday, and now it's pulling back somewhat here, of course, on that downgrade. But this is something that could become an opportunity. And again, look at the PMO. We're on a buy signal. Looks very good. We've seen the PMO get up as high as 15 for ABUS. So I would be watching this one closely. It doesn't have the history to give us enough on the scooter, but you can see for what it does have right now that it can start getting calculated, it's at 97.4. So I like this one, even on the downgrade. Costco, we got a downgrade, and it doesn't seem to be hurting it too much, up almost 1/3% right now. The PMO, though, is on a sell signal, and although it is decelerating, I would be a little bit concerned here. I would look for support. You know, we're looking at it on the 20-day EMA. If we lose that area of support, I would be quite nervous about Costco. However, you know, this is a pretty good stock. It's been doing very well through the spring and into the summer. So I would watch this one closely, but it has been downgraded, and I suspect there's going to be better choices out there. Gannett Company on the downgrade, down over 7.5% right now, but it is sitting on some interesting support here. But I don't like seeing it drop below that 200-day EMA. You can see the 5 is crossed below that 20. Not a surprise when you get that big gap down and a low. Currently, we're, like I said, you're reading it over 7.5% lower. You got the fake out on the PMO. Volume doesn't look too bad here, but we know based on just what we're seeing today, we're going to end up getting that OBV dropping. Finally, High Crush Partners, also a downgrade today. It's been in a trading zone, and you can see that the PMO is trying to make a recovery here. So even though it's down 1.25%, I'm not so sure this is a bad choice. The point I would make on this one, you know, we're in this trading zone. I would definitely want to see a breakout above that 1220 area, 1225, before I would be completely interested, because you could also make a case for a reverse flag here, continuation pattern, which would mean lower prices. So we need to see that 200-day EMA hold up. And that's all I have for upgrades and downgrades. What are we going to talk about next? The blogs, the blog highlights. Why don't you take that over, Tom, and I'll get my blogs ready.
Yeah, I just want to make sure everyone's aware of the blogs. Pretty obvious here at the top of the members dashboard, the homepage. You got the blog articles up here. If you click on that, that will bring you to the page, and there's really a lot of great information here. So if you're not aware of it, I just want to make you aware of it. Here at the All Stock Charts blogs, this drop-down menu, you can take a look quickly at any of the various blogs that we have. You can see down at the bottom, there is a paywall that you have to be a member in order to access these 3 blogs, John Murphy's, Martin Pring's, and then Art's Charts. But all these others are free. So simply, check them out at your leisure. I do want to point out, though, that if you wanted to subscribe, if there's one that really stands out, maybe you're, in Canada and you're really interested in a lot of the commodities and so forth. Greg Schnell does Commodities Countdown, and also the Canadian Technician. So you could maybe find something that really is appealing there. And if you pull up, for instance, Commodities Countdown and go to the bottom of one of the articles, and this isn't just for this blog, but this is for all the blogs. If it's a blog that you're really interested in and you don't want to miss articles, you should subscribe. It is free. You're not going to be spammed. And at the bottom of all of these articles, so at the end of the article, you have to keep scrolling down, but you'll get down to the bottom where you can just simply type in your email address and hit the subscribe button. And from that point forward, anytime that author publishes a blog article, it'll be sent immediately to your inbox at the email address that you provide. So really a great service that's provided at StockCharts, a great feature, and keeps you up to date with anybody that you want to follow at StockCharts. So that was really, I just wanted to make sure everyone is aware of that. So I'm going to turn it back to you, Erin. You can go through some of the blog highlights as you see them.
All right, let's go ahead and do that. I wanted to make a point to show you some of the blogs that I think are important. First of all, to get to them, as Tom was showing you, just click on the blog articles tab, and this is going to be bring you to a plethora of articles that are very timely, that you can see. I noticed that in the chat room, we do get some questions. A lot of times you're going to see those answered in some of the blogs. Looks like Tushar just gave us an article. He doesn't publish that often, so highly recommend you check out that. But as Tom, you were mentioning, probably one of the best blogs that we have on StockCharts, and it's hard for me to not say that mine's the best, but John Murphy's Market Message is a must read. And yes, it is behind the paywall, but you only need to be a basic member, and you get all of the information you need to know about what's going on. And a lot of times he will talk about what the news is and how that's going to affect certain markets. There's always a lot of great charts in here. And if you ever see a chart that you like or that you want to store, you can just click on it and it'll bring it right up for you in the workbench. And then all you have to do is go ahead and save it. Save it as whatever it is you want. If you want to protect any of the annotations, you will need to go into the annotate portion of the tool. It doesn't look like this one's coming through with the annotations, but if it comes through with annotations, you will want to annotate it yourself with just anything. And then when you save it, it'll protect all those annotations that you got from those blog articles. But highly recommend you check out John Murphy's blog. The Market Message is just, again, chock full of information. And Arthur Hill will also write in there and fill in for John Murphy at times as well in the Market Message. So recommend you check out John Murphy's Market Message blog. And of course, one of the ones I certainly want to highlight is the Decision Point blog. And I really want to highlight, the main one I want to highlight is, I do write fairly often in this blog, but on Fridays, Carl, my father, he writes the DP Weekly Wrap. And basically he goes through all of the main charts that are important that you need to see and what's happened with them over the week. He looks at the weekly charts. And in this case, on the June 29th article, all of our monthly charts went final. And so he talks about all of those different monthly charts. He annotates them for you. And here's a great example of how you can protect annotations if you like them. go on into annotate, and you can just, put anything in there. And then you save the changes. Yes, save it where it is, where you would like to put it, and upload it. And there you go. Now you're going to have those annotations. You'll have that chart. You can go down and look at how it was set up, what the parameters are, and what was used, and colors, all of that. So if you want to save that chart style, you can do that as well. The main thing I want you to know is that all of those charts that you see in those blogs are available to you. And finally, the last one I do want to show you, of course, is our Market Watchers Live blog. This really is a recap, meaning it's not, I don't rehash everything we talked about, but I give you just the summary slides. And I think what's very important as well is if you want to go back and watch, there's our schedule, so you know what's coming up. Here's the agenda of what we covered. And then I will put in the timestamps. So if you go to YouTube and you kind of want to skip, our technical news, no offense, Tom, but sometimes it's, obviously it doesn't have the shelf life that some of the other segments do. That helps you find where you want to go. And then also, I will put in some of the charts that they showed if we have a guest. And I also want to point out at the bottom here, when we did technical scans, I told everybody that I would print up my scan that I used for that day. And you can just, go in here and copy and paste it and put it right into your scanning workbench. So I just wanted to go over those and let you know that they are there, that you should consider, like we were saying, subscribing, going down to the bottom of the message, and you should be able to get into, there we go, that's the discussion. There it is. Subscribe to the blog and just put your email address. And as Tom said, it's no spam. It's only for this blog. It'll notify you. It's not going to notify you for all of our blogs. It's only for the ones that you subscribe to in particular. So Tom, did you want to point out any more highlights in our blogs? I know Chart Watchers are getting ready to come out. Oh, don't hear you. I think you're muted.
Yeah, I could not find the button. It disappeared. Everything on my screen disappeared. But anyway, sorry about that.
No worries.
I wanted to go through the Chart Watchers real quick. And it is a Chart Watchers weekend. And so again, if we go into the blog articles, first thing I obviously want to point out is that on the right-hand side here, you can type in your email address and sign up. And by doing so, then you'll receive this newsletter. It comes out the first and third Saturdays of each month. The highlights, John Murphy, Greg Schnell, Aaron, me, Arthur Hill, Julius, all post on this once every couple of weeks, just kind of giving you our latest thoughts on the market, maybe something that really stands out to us. And if you go under this drop down that I talked about earlier and click on Chart Watchers, this will just bring you up all of the individual articles that have been in these newsletters. And I wanted to point out just a couple of these. They're all great articles. I did want to mention, though, for instance, sometimes you can get theme ideas. And I know Greg on his last one was pointing out that the consumer staples area was starting to show up. More and more stocks were beginning to show up in on scans. And some of these stocks have really done well over the past couple of weeks. So I thought that was a really timely discussion there. I think also if you scroll down, Arthur had two continuation patterns take shape on the XLI, but he didn't leave anybody hanging. He actually said, here was the breakout. This is like a little flag pattern. So in order to break, in addition to breaking out of a wedge, which is bullish, we also had a move up and a flag pattern in play. But what he went on to say was that if it closed below the flag lows, so if it closed below this, it would negate the flag and invalidate the wedge breakout. And if you click on this chart, like Aaron was mentioning, and you go to the live version, look what happened here. It actually did break down. And so according to what Arthur was pointing out, that if you're playing this pattern and it breaks down, you want to take notice technically. And the XLI, after breaking down and closing, looks like maybe around 73 and a quarter, just about a week later, maybe a little over a week later, was down below 71. Down another 3%. So I thought that this, a lot of times you have to recognize when you make a call that's not, what you were expecting, and you've got to be prepared to exit that. So I think that was a great example of how not only that he saw the patterns, but explained, what you wanted to look out for in the event that the trade began to go against you. So I thought that was a great article. And let's see, there was another one that I wanted to point out. Well, actually, the one that I had written back at the beginning of June, it was a little bit of a shocking headline, but I believe this. I think the stock market's going to go up a lot. And so you might agree, you might not agree, but I went through my explanation showing why I thought that the market was going to go up a lot higher. And in this particular article, I showed the triangle pattern. Normally, I'd rather see an ascending triangle than a descending, but after a huge move up on the S&P 500, we're consolidating. I think we've broken out of it. We still continue to consolidate, but I expect that the next big move is going to be the upside on the S&P, and I actually like the small caps and the NASDAQ much better than the S&P as we go forward. Another blog that I think is really one that you should keep your eye on, and that is the Don't Ignore This Chart blog. Yesterday, this is normally published by either Greg Schnell or Arthur Hill, but I know Arthur's on vacation for a couple of weeks and Julius is filling in. But let me show you a chart that Greg did yesterday on Medtronic. This came out last night. And if you're looking for ideas to trade, I think this is one great place to look. Greg mentioned how Medtronic has been bouncing here up against this resistance level, trying to make a breakout. It's in that healthcare space that I was talking about earlier. I think this is a really nice looking chart. And he went on to say, look what happened back with JP Morgan when it went through a long period of trying to break above a key resistance. When it finally did, look at what happened to it. Now, he's saying, this doesn't mean that this is what we're going to see here, but it sure would be nice if we make this breakout on a technical basis. Could lead to some sizable gains going forward. So I thought that was a really timely article given what is taking place with healthcare today. And then while everybody, including myself, was celebrating July 4th here in the U.S., Julius was actually making a post on July 4th, and he talked about the RRG. And from the top 10 S&P, you can get this right on your homepage, member dashboard. You can click on the RRG of the top 10, and then it'll bring it up in an RRG. And he noted that GE was beginning to strengthen, moving through the improving group and heading toward the leading area. So I thought that was another very timely article. It just gives, again, a lot of ideas. And, we're doing a lot of the technical analysis and research and publishing these different articles and so forth in various blogs. And I just hope that everybody, is really able to take advantage of a lot of what we do at StockCharts. So we're going to pull up that poll in just a second. But first, here's a summary of what we just talked about. Went through a number of different blogs. And as I pulled up that drop-down menu, there are a ton of blogs there. We just covered a few of them. Check them out. I would highly suggest you check them out and see which ones align to your own trading strategy and so forth. But I think it's a great tool here at StockCharts. I believe it's probably underutilized quite a bit. And so that was the reason we had asked for your thoughts on which blogs you subscribe to and so forth. So let's go ahead and take a look at that poll here in just a second. And I don't know about you, Aaron, but I look at a lot of these different articles that come out, especially Chart Watchers, because it is issued on the weekend. So I have time to look at that. But do you also take a look at these other articles?
Well, Chart Watchers, I agree. And part of the beauty of Chart Watchers, I think, is that we have so many different authors all publishing it at the same time. Because during the week, they pop up and you sometimes get one, you don't get one. I like the fact that everybody that we really work with is included in the Chart Watchers. And yes, I subscribe. I'm in that 4+ category because I subscribe to just about all of the blogs that are there. Market Message, of course, like I said, with Arthur, with John Murphy, I try not to miss that. And wow, the other day, John Murphy actually sent me an email about one of my articles, and I was absolutely shocked that he actually read my stuff. And he's like, well, of course I do. So He likes to keep up with everybody as well.
Yeah, and there's 20% of you out there saying you don't subscribe to any of these blogs. I hope you at least read the blogs, because there is a tremendous amount of information there, and you might want to think about subscribing because it is easy. It's simple, as I showed you. Just go to the bottom of any article within the blog that you like, and you can sign up, put your email in, hit that subscribe button, and it's that simple. And then the articles, as soon as they're published, will be sent to you.
Yep, and it's all free.
And it's free. Most of it's free.
Most of it.
Most of it is free. Okay, well, let's move on. I know, the market's having a good day. We're definitely seeing some areas of the market breaking out. May, why don't you go ahead and take a look at some of the charts that you're looking at, Erin?
All right, I certainly will. So what I did in order to find my chart breakouts is actually I used the same scan that I used yesterday when I was looking. I can't remember what we were looking for that I did that. Technical scans, that's right. I was showing you how to use technical scans. And this particular scan, I do have, like I said, it's all printed in yesterday's Market Watchers Live recap. So if you want to get to it and use it yourself, I ran this scan and I came up with, I think there were about 10. Let's see if it's still coming up with about 10. Yes. And what I like to do is go through candle glance and pick out which ones I like best, which I've already done to save some time so I can go through some of these charts I think are very interesting. So for me, chart breakouts means it leaves a consolidation zone or it breaks above, obviously, some important resistance. And those are the things I'm looking for. And especially those really nice chart patterns that will sometimes appear. And I would say right here, Opus Bank, OPB, we've got a chart pattern that's right here, this double bottom pattern that's coming off of this, well, it's coming off of a rise here. And technically, I guess a lot of people would say, no, it's not a double bottom because that's a reversal pattern. But I think that I would consider this one. I mean, look at this. We've got a beautiful PMO just about ready to give us a buy signal. And let's go ahead and go into the annotations. And our trusty auto support and resistance. I'll just do the big areas here, and I like to make mine a little translucent there. Okay, so you can see this area right here is a pretty important area of overhead resistance, and we popped above it, and we weren't able to close on it. You can see that in the thumbnail, but we're getting ready to pop again above that confirmation line that you would draw across the middle of the W. And typically with chart patterns, as I talked about this week on Tuesday, last Tuesday, I talked about different ways to trade these patterns, and you look for the height of the pattern, and that's how much you should expect it to go to the upside if you get confirmation and it breaks out. And that's what I think we're getting ready to get. And again, this PMO I think looks great. This could be an important breakout because we haven't seen prices that high for the OPB, Opus Bank. And look, the OBV is starting to trend a bit higher, and so is the scooter. So I thought this one was an interesting chart breakout. Let's see, let's go back. Again, I like to go into that candle glance, and that way I'll be able to pick the ones that I think are the most important. Let's look at Eagle Bancorp. And I find this interesting, Tom, when I do these, is looking at what sectors they come from. And in fact, let me go ahead and do the summary just so we can see. And we can see that I'm getting the financials and healthcare. And I think, I think John Murphy wrote about healthcare improving right now. So we ended up with those as well. And the SPY, I think I have that one in there from before. All right, so let's go back to our candle glance. There we go. Yeah, the SPY did come up on this one as well. And you can see the breakout we're getting. Let's see. Oh, that was the one that was Carl's. There we go. Let's go back over here. But I know we did get a breakout on the SPY as well. And we've been talking about it. So here we go. Emergent Biosolutions. This was in the healthcare area, obviously a biotech, I believe. Getting that PMO buy signal coming in. We're seeing some great movement on the scooter to the upside. I look for those rounded bottoms. You've got 5-day EMA just crossing above that 20, which is what sent this into my scan box, was because we got that 5-20-day EMA crossover. So I'm looking at this chart. I think this looks pretty good. I would expect to move up to that 56 level, and you could set that stop right around 53, and that would be a pretty good reward to risk there on that chart breakout. All right, we were looking at Eagle Bank Corp earlier. Actually, I don't think we picked this one up. I really, the thing is with this one is we haven't quite had the chart breakout. And I think you, Tom, you sometimes will look at that too, is we're looking at what is on the verge of a breakout. And there's another double bottom configuration, and you have that PMO buy signal. Now, you've got declining tops on the PMO, and you have declining tops on price. So I would add this one to the watch list. The scooter's improving. Again, let's see if we can get that breakout to hold. You can see right here, higher than these previous tops we had earlier in the week. And let's see, 1-800-Flowers. This one has really been in a consolidation, but I was looking at the breakout from this earlier consolidation this past week, this possible very short-term flag that's forming here in the thumbnail. You can see that the PMO is on the rise. The scooter is starting to turn down, which, that could be an issue, but I'm looking at, I have to annotate this, Tom. All right, support and resistance. Actually, I'm going to use a trend line. Let's go with blue. There we go, don't need an arrow. So what I was looking at right off the bat here was this rising bottoms trend line, and then what appears to be straight horizontal overhead resistance. And this pattern is an ascending triangle. These are bullish patterns. If you get the breakout on this, the expectation would be a move the size of the back end of this pattern. And that could be a really good possibility here if we get that breakout. So I would be watching 1-800-Flowers. And I think you could even show it on the weekly chart. Let's go right there. And you can see that breakout would be very, very important if we could get over that overhead resistance. And we could even pop up to an all-time high here for 1-800-Flowers if we get that move above that 1350 level. So I would keep a close eye on 1-800-Flowers. Mazor Robotics, I know we talk about this one a lot. You can see the breakout from this consolidation zone that's happened today and yesterday. The 5-day crossing that 20-day. Look at the PMO, rising bottoms on it with rising price bottoms. That's a bullish confirmation. Overhead resistance is sitting here at about 62.50, 61.75, somewhere right in there. I would look toward a breakout there. I think this one's looking pretty good at this point. And those were the ones I wanted to go over with you. And Tom, I know you probably have quite a few, so I'm going to give you some time.
Sounds good. All right, we got the media agencies talked about earlier. We did break out above 565, held the 20-day moving average, and now moving to new highs. I showed on the weekly chart, if we can get through 590, I think this is a group that could really move. And we are seeing already some breakouts in the group, so I wanted to pull up a couple of these. Quinn Street, QNST. This is a stock that is making a breakout above that March high. You can see the volume is beginning to accelerate as we make this push to the upside. So I definitely would have this one on my radar. ACXM, this is Axiom. Axiom Corp made the breakout already. We saw this a couple of days ago, some very heavy volume, and it continues to trade higher. I'd like to get this one on a pullback. It's made a huge run, but you can start to begin to see at least these stocks within this space are starting to show some pretty solid relative strength. MCHX. Now, on this one, it made a breakout back in mid-June. I think I highlighted this once before, maybe on a momentum sleeper. But if you look at a weekly chart, it did make a breakout above $3, and it did so with volume beginning to accelerate. And now it's pulled back. So if the overall group is strengthening, I think this is one that could make a really big move. It is a smaller stock, obviously takes on some additional risk, but a break back up above 320, I think, would be extremely bullish for MCHX. And then, so those three were all three stocks that had pretty decent scooters. One that was lower, though, is Outfront Media, OUT, but you can see the breakout here above recent highs. We had a negative divergence, higher prices, lower PPO. We went back. We actually got a nice reversal right on the 50-day moving average. We tested center line, and now here we go back to the upside again. I think Outfront is certainly beginning to strengthen and looks good. The other area I wanted to talk about was the Biotech. Spent some time earlier talking about the Biotechs. Here is the clear breakout after consolidating mostly sideways the last 3 or 4 months. It's important because biotechs tend to run very, very fast, and they can do so in both directions. But I think this breakout in the month of July, where we tend to see seasonal strength in biotech stocks, I think is worth paying attention to. I mentioned earlier ARQL, here is a nice breakout. We got up to $6, pulled all the way back to 4.5, worked our way back to 6, and now look at the volume coming in on this breakout. Clear breakout on ARQL. Once ONCE, Spark Therapeutics, after a beautiful move up, came back, tested price support and the 20-day moving average, printing a hammer. And now here we go, trying to make the breakout. I'd like to see more volume come in on this one this afternoon. We do have overhead resistance closer to 94, 95, which was set just a few weeks ago. So if we fail here, maybe one more trip down, but I do like this stock. It looks to me like it's either on the verge of a breakout or perhaps we'll pull back and break out later, but the stock looks good. ICPT, Intercept Pharmaceuticals, made the breakout a few days ago, continuing that push to the upside. Really nice volume trends on the stock over the past 30 days or so. And then Seattle Genetics, SGEN. Here's a stock that's trying to break out. Huge breakout back in early June. Pulled back, look again, hammer on the 20-day moving average and at price support. And now we're trying to get through resistance. This could turn out just to be a flag and sideways consolidation for a bit, but I fully expect we're going to see a breakout in time on SGEN. And then the last one I had was Vertex Pharmaceutical, VRTX. And breakouts come in different shapes and different sizes. Sometimes you get breakouts when you have 50-day moves to 52-week highs. Sometimes it's a breakout above a moving average. Sometimes it's a trend line. Sometimes it's a pattern. Here you can see a sizable move. This is a very, very strong and bullish candle on Vertex just about a week ago, where it had gone from 147.5 to 170 in one day with heavy volume. This is a little bit of a flag that formed just after that. And now today we're breaking out above that 170 level, looking to test 177.5. I'm going to pull up the weekly chart here on Vertex. But you can see off of a huge move to the upside, sideways consolidation. We had a negative divergence, lower PPO, higher prices. And on that last breakout, volume looks to me like it was just kind of average. Went back, we reset the PPO at the center line, tested the 50-period moving average, and now we're starting to accelerate with volume beginning to expand. So I look for a breakout here on VRTX. I think biotechs look really good. And again, they are very strong historically during the month of July, and it seems like they're getting off to a pretty good start this July. Okay, let's pull up the recap. And while we're doing that, I do want to mention that we do have the S&P 500 poll up for where you think it's going to close next week. So definitely check that out, and we'll bring that up and talk about that at the end of the show. Okay, kind of went through a number of stocks there, Aaron, but some things to think about.
Absolutely. And I thought quite a few of them looked, as we always say, Tom, very interesting.
Yes, interesting. Some of them already made breakouts. Maybe a pullback would be in order, to look at rather than to chase them. Some, as you pointed out, I think we're maybe preparing for the breakout, sideways consolidating. So definitely stocks to keep on a watch list and maybe have some opportunities down the road.
Absolutely. All right, I closed out the requests for the 10 and 10, but we're still taking votes for the most popular. The last time I looked, Micron was winning. So if you would like to see Micron, definitely give it a like. If you don't, then you need to vote for some of the others. So go on ahead and do that. I thought the RRG looked pretty interesting. We have quite a few of these that are making that turn to the northeast direction. So I'll probably take a peek at those. And then as far as sectors go, technology and healthcare certainly leading the way. I guess you could say materials as well. So let's go ahead and start with our first one. Tom, how about Key Corp?
All right, Key Corp, that is KEY. And let's see. I mean, the financials have really struggled, and it's I still am expecting that they're going to rally, but that's based on the belief that I think the 10-year Treasury yield is going to strengthen. So we'll have to see. But just looking specifically at Key, there are a couple of levels to watch. I think the big one to the downside is the low that was established back in April. That's down at about 1865 or so. We're currently sitting at 1971, so we've got room. And, you know, from a longer term perspective or more intermediate term perspective, we have resistance up at 22. So if I had to take a position on Key Corp, I would be on the long side, but I would be using weakness to build my position down to that 1865 area. So I like the stock. I think we could get back up and test that 22 level in time. In fact, I expect that, but I would keep my stop a little bit below that 1865 area.
All right. And the most popular request in the chat room is Micron, MU. And good thing, because we looked at that within the last week and a half. So I try not to pick the ones that we've looked at over the past week or so.
Yeah, Micron did report that their Q4 revenues are, they just kind of reaffirmed their guidance. And so I think that's helped pause some of the slowing or some of the selling that we saw in semiconductors in June. Still technically though, I'd be careful with Micron. I think a move back above the 20-day moving average and into this gap resistance zone would be a bullish development, but I'm not going to expect that it's just going to happen. I need to see it. So I'm going to put a line right there. I think 55.75 roughly is an area you want to watch on Micron on any pushback to the upside. If we can get through, then I think maybe what we have is off of an uptrend, maybe an inverse head and shoulder, left shoulder, neckline, head. Maybe we get back up to 62 to establish the right side of the neckline, one more pullback, and then breakout, and off we go. But we're really early in that pattern, and I'm not saying that's going to develop. We need to watch to see if it develops. A move above 55.75 to 56 would be the first step there. And in the meantime, as long as we trade below the 20-day moving average, I'd be careful because it does have downside potential. I would throw out the early May low just below 46 as key support. The closer it got to that level, the more interested I've become on the long side.
Okay. Next one I have for you is in the property casualty insurance, Travelers, TRV.
Okay, Travelers, it's got a couple things going against it. One, it's a large cap, so it's been underperforming along with the large caps. And number two, it's in the insurance space, which has just been kind of like the banks in the doldrums. I think the lower 10-year Treasury yields holding them back. And even when the yield was rising, this was a group that was struggling. So I would continue to watch maybe some trend line resistance, maybe around 128 there. I think also we broke below the prior low here at 126. So I think we have and then the 20-day moving average. So there's a number of key resistance areas on Travelers. I think there are a lot better stocks out there, so I'm going to pass on TRV.
Okay. One of the other ones that was very popular is the junior gold miners, I think it is ETF, GDXJ. And, you know, I know you're probably not going to be interested in gold miners. And, you know, honestly, I'm not really that interested either. I don't think gold's doing well. And while gold miners do not necessarily travel exactly with gold, they still do tend to be hurt if gold's going down.
Yeah, I think there's a couple things. I'm going to add one thing to my chart here, and that is just to show the GDXJ relative to the S&P 500, because that's my biggest argument with it. It's not that the group doesn't move higher from time to time. It's just that there has been this overall tendency to lag on a relative basis, and especially with the dollar now moving higher. And I think in the short term, GDXJ has a shot to move up a little bit because I do think the dollar has a little downside potential here in the near term. But just take a look at the GDXJ down here on the bottom relative to the S&P 500 and what it's done. And I could even go back further. I mean, if we can go back to, let's just go back over the last 8 years. There was a top back in 2011, and take a look at what the GDXJ has done since 2011. If I'm trying to outperform the S&P 500 and I'm trying to do it with these junior miners, best of luck to me, because I mean, maybe you can catch there. We did have a little bit of relative strength back in 2016, actually quite a bit of relative strength in 2016, the first half of the year. But other than that, the GDXJ relative to the S&P has been going lower, and that coincided with that major bottom in the dollar back in 2011. So I think this bull market is completely different than the one we saw in 2003 and to 2007. Back then, we had a falling dollar, and so that allowed the commodities to do pretty well. I think in this environment, this is the wrong area to be in. I'm not a fan, and so I'm sorry, but I would pass.
Okay. Well, you don't have to be sorry. It's what you see. All right. Let's see. ARC Genomic Revolution Multi-Sector ETF. That would be ARCG, so ARKG.
All right. That was a mouthful.
Yes. And I did it.
All right. I like the move up. I think the pullback back to the 50-day, the hammer, I mean, all of that I think looks really good. I expect that we'll go back and at least retest the recent high, and off of an uptrend. What I'm actually looking for here is a cup maybe to form. So there's your uptrend, and then you can use this little parabola tool to just mark 3 points. And by the way, right at the top, look at that bearish engulfing candle. I mean, if you're in it at that point going higher and you see that candle, if you're a short-term trader, that is a sign to move to the sidelines. And then we came down, put in the hammer, and so far you can kind of see this cup forming, moving back toward that 31.75 area. So I think we'll get there, establish this cup, maybe pull back, put in a handle, and then move higher. I think this is a nice looking, I think it's a nice looking chart. I expect that we'll see higher prices in time.
All right. From the chemicals industry, and it's a Canadian stock, NTR.TO.
All right, NTR.TO. Uh-oh, did I type it wrong?
NTTR, I can't see.
NTR.TO?
Yes, N is in Nancy, TR.TO.
All right, let's check this out. Yeah, I like this pullback on the 20-day. It's also testing price support. So this is a pretty, you can annotate this one really quickly. But right there was your breakout. Look at the volume coming in on the breakout here above 70. Got up to 73. We pulled back. Looks like we're testing the 20-day and price support and beginning to turn back to the upside. I like it here.
All right. Let's see. The next one I have is going to be AMTD, Ameritrade, I believe. Yep.
All right. Ameritrade's in that financial space, which has struggled. We did try to make a breakout, and we failed. And that occurred back at the beginning of June. And just another example, I think, of all of these financials that have just been so weak of late, especially in the month of June. I probably should have gone back a little bit further, although I do think this is a pretty key area of support. So if we get down below, 52.75, that would really bother me. That was where all the selling took place back in early February on big volume. And back then, Ameritrade was still doing really well. Back to the upside now, I would be watching this low. Notice how this was holding multiple times. We finally went below it. And so now I think we're trapped between about 52.75 to the downside, 56.5 to the upside. And you can see the declining 20-day moving average just above that resistance level as well. So this is the area that I would consider Ameritrade to be in the short term.
Okay, next one. I don't know if anybody's heard of this one. IBM.
IBM. It rings a bell. It rings a bell. I was looking at this one recently, and I think, I don't remember what I remembered or what I was thinking.
I do that all the time.
Yeah. Maybe it was something seasonally that I'd looked at. I can't remember, but there was definitely something that I recall recently about IBM. I would just say at this point, using this weekly chart as kind of an example, it's been underperforming and staying below its 20-week moving average since the huge sell-off back in April. You see this big drop. We kind of went sideways, tested that declining 20-week moving average, and then fell back to a new low. We're coming back up, but I really think we need to continue to watch this 20-week moving average on any strength. If we can get back above it, I would feel much better about it. But until then, I would avoid IBM.
Okay. Number 9, Celgene, CELG.
All right, this is in the biotech. I already know I've looked at it earlier. It is trying to strengthen. On a relative basis, it's been a very, very weak performer. I guess, as a bottom fisher, you could certainly be thinking about this one, the fact that now it has broken out. I would just say this: if it is truly moving higher, it probably should hold on to the combination of price support at 80 and what is now rising 20-day EMA support. And it has been holding recently, as you can see. That I would look at to the downside, which is at 79.20. I'd keep a tight stop on this one because I do think this has been a relative laggard in the space, and I think it's going to potentially have some problems when it gets back up to about 85.
All right, let's finish with Tesla, TSLA. They've been in and out of the news lately.
Yeah, Tesla actually had a great week. We mentioned this one in the show, I think, yesterday, but it had gapped up after they announced that one of their key model had, I think they had produced 5,000 in a week for the first time at the end of June. And so that news, everybody jumped in. And then, of course, the selling began. I like it here at this level. I pointed out yesterday, I thought 310. We closed just beneath it yesterday. So I would trade this one. I don't own it right now, but I do think it's an interesting trade with that hammer that printed right at about that 310 level. I would use the tail of this hammer as my closing or as my intraday stop. If it goes down below that, I'd get out. But I think you got a really nice trade here with maybe about 3 or 4% to the downside and the possibility of about 20% to the upside back to that 370 area, which would be my target. So I like Tesla here. And if we could get a bullish engulfing candle in addition to that hammer, I think it would begin to really confirm this pattern. So I think it's I think it's a buy from a reward to risk standpoint.
Yeah, I have to agree with you. I mean, that double top is pretty much shouting. And, this height of that pattern, we've already pretty much hit that to the downside. So I think it's in a really interesting place.
Mm-hmm. Great.
All right. That concludes the 10 and 10. And here are the symbols that we covered today. I will have these charts up in the Market Watchers Live chart list. We showed you the blogs tab. Just go to the top of the Market Watchers Live blog page and you'll see the link to those symbols. And of course, like we were saying earlier, you can click on those charts and save them to your own your own chart lists and get those chart styles that you like that Tom uses. All right. We'll be right back with the final market update after this message.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.
All right, let's look at the final market update. Currently, markets are all traveling upward. We see we have hit some intraday highs and are pulling back slightly on the Dow, S&P, NASDAQ. Mid-caps, though, seem to be still moving their way upwards and creating new intraday highs. Russell 2000 looks like it's stalling just a little bit, but still having a great day, up 14.78 points right now. The TSX following the US markets, also moving up quickly, seems to be hitting that intraday high for the day, but I would look for more to the upside. Look at this breakout from what we saw on July 3rd, actually. All right, or July 4th, because you all were open in Canada. All right, TNX, as Tom has been talking about, we are seeing a decline right now, currently reading 2.83%. TLT, big gap up and now pulling back. We can see that we are starting to get a little bit of a move back to the upside there, currently reading at 122.64, up almost 30 cents. UUP, big gap down, mostly consolidating sideways at this point. You can see oil also, it started the day lower, but is making its way back up. Looks like forming a possible flag here. And we can see with gold moving also lower. So we've got the dollar lower, and we also are seeing gold lower. Currently GLD at 118.92, and the VIX is moving lower as we speak. 13.53 is the reading currently on the VIX, which implies some comfort level within the market. We're not seeing those worrisome numbers up in that 16 range, even the 15 range, which is where we opened for the VIX. And that concludes our final market update. I'm going to pass it to you, Tom, while I get my sentiment update together. And everyone, please do take that poll that is going on in the chat room. And currently, it looks like everybody's in the higher position. We'll have to see if you still feel that way after the sentiment report.
Okay, what I have here is just a chart that I like to follow very closely in terms of what I expect out of the dollar. And it's a 10-year chart showing U.S. Treasury yields versus Germany's Treasury yields. And you can see from the left side, since this bull market began, we have been seeing interest rates here in the U.S. moving up faster than in Germany. And that tells me that our economy is stronger than what we see in Germany, because that's usually what drives interest rates higher. And with that strengthening economy, you expect to see a strengthening dollar. And most of the time you do. But we did recently go through a period of what I would call negative divergence or negative correlation, where we saw the interest rates going higher in the US faster than in Germany, 3 different periods of it. And during those 3 periods, you can see the dollar was dropping, which is very unusual. And that's what triggered these 3 negative correlations. After each of these 3 negative correlations, though, we saw the dollar really take off to the upside. We're seeing it again now. That's why I think the dollar is going to continue to move higher, because I'm seeing no weakness whatsoever in the U.S. Treasury yields relative to Germany. Now, of course, the Treasury yield has been struggling and has been consolidating, but it's still on a relative basis is moving up faster than Germany. That should create strength in the dollar. So outside of maybe a little short-term weakness in the dollar due to the negative divergence I showed earlier, I think we're going to see the dollar index break out. And what that means is the relative strength in small caps that we have enjoyed throughout 2018 so far, I think it continues. In fact, I'm going to make a call. I think we're going to break out above that 2014 high. I think the small caps will be back up on a relative basis above that Q1 2014 high relative to the S&P 500. And so I think there's still a lot of opportunities in small caps as we head into the second half of 2018. So I will turn it back to you, Erin, for our latest sentiment update.
Okay, let's get that started right here. Okay, so sentiment, just a quick review. Sentiment tells us how investors are quote unquote feeling about the market. I also have a few, technical readings that tell me how people feel about the market. What is interesting about sentiment is that the more bearish everybody is feeling, the more bullish that is for the market. So I read the sentiment numbers and I look, and we want to see investors feeling bearish, because if that is what's going on, then that, like I said, would be bullish for the market. And of course, opposite would go for investors being bullish. That would be bearish for the market. So the first chart I want to look at is the put call ratio, the 10-day moving average for Cboe, equity, and OEX puts and calls. One of the things I thought was very interesting today when I looked at this chart was the Cboe put call ratio. You can see right now it's starting to get into quote unquote overbought territory, meaning we're getting readings showing people are getting bearish. Remember, high readings, at least in this case with put call ratios, the high readings mean investors are bearish, and that is bullish for the market. So I like seeing these rising, because that's the direction we want it to go. We want investors to be feeling more bearish, because like I said, that is bullish for the market. And I have annotated areas where we had these tops in the sentiment as far as put call ratios. And you can see typically when we get the tops, after everybody's gotten especially bearish, you start to see a rise to the upside. Doesn't always work, but in general, that's what you're going to see. So at this point, looking at the put call ratio, I would have to say that we are seeing some bullish activity here. We've got, like I said, Cboe and even the equity put call ratios are on the rise. You'll find that the OEX doesn't necessarily, the put call ratio doesn't necessarily track with the other two, but from what I understand, talking to various other technical analysts, is that what you see is those are used more as a hedge, the OEX puts and calls. So a lot of times you're not going to see them track exactly with what we're seeing in the Cboe and equity put call ratios. So right now, I think the as far as the put call ratios go, that we are seeing an increase in bearishness, and that is bullish for the market. AAII, the American Association of Individual Investors. This is a poll that they run on their website. People can go there. I believe you can go there, and there's that poll. Are you bullish or bearish or neutral, basically? And these are the results. So these are, you know, it's a vote. So let's look at what we're seeing right now. We're still seeing a lot of bearish sentiment out there. You can see that it's very close to some of these readings to the, well, I would say downside, of course, because we're getting more and more bears. And typically when you get that, when people get especially bearish, you're going to see a price rise typically come out of that. So we're looking right now at the bottom here, the bull bear ratio. And when that gets very low, below 1, as you can see the green line here, we look for, that's pretty much where you're seeing an even number of bulls and bears. That's of course how you would get a reading of 1. So if we start seeing the readings get smaller, that means we're getting more and more bearish activity and sentiment. And at this point, we are sitting at a very low ratio for the week. And so again, I find that to be bullish for the market. Everybody is feeling bearish. Notice we had just a slight contraction of the bears here, and a little bit, we also got a contraction as far as the bulls are concerned. So that's why our ratio really stayed nearly the same from last week to this week. But I would look at the AAII sentiment as leaning bearish, which is bullish for the market. Now we're going to look at the National Association of Active Investment Managers. These are the big guys. They tell us how exposed they are to the market currently. And you can see that when we get these very high exposure ratings, that typically will lead to a rally. We'll see a movement to the, I'm sorry, this is no. No. When you see exposure very high, that means that money managers are feeling quite bullish because they're very exposed. And so usually when you see these really high readings, and we got the third highest reading 2-3 weeks ago. We got the highest historical reading back in, late 2017. These are really important to note because typically, like I said, it's going to end with a decline. You might see a little bit of a price rise at first because these guys do tend to be on the right side of the market a lot of the time. It's just when we start seeing those, extreme readings, that's when this is, you really want to pay attention. Right now, I would say, they're elevated, but they don't look too bad at this point. I would read this in the neutral zone for this type of an exposure ranking. So I think we're mostly neutral when I look at the investment manager's exposure. Let's go ahead and look at the Vrtx asset analysis. This is, I think, one of the most important sentiment charts that we have that is out there. And I say that because this is not a poll where you just click like we're doing right now, not to talk down our poll that's going on in the chat room, but it's a poll. You can just vote whichever way you want. It's not telling you money where the mouth is, but this particular chart does tell you that. We follow a basket of funds that used to be run by Vrtx. Guggenheim now owns these funds, but we've kept the Vrtx name just for posterity, and the fact that we have named it the Vrtx ratio. That's what we follow on top here. So let's first look at where the assets are going. And in this case, yes, you know, the last bit that we got here was a bit of a decline as far as these bear funds go. When I read this chart earlier, we did not have the July 5th readings in there. So I'm going to just on the fly move these around a little bit, because that'll give us a really good feel for what's going on. So those were rising. The bear funds were rising this morning when I was looking at it. But as you can see, as of last night, they are starting to decline. You're definitely seeing a move, though, in money market funds moving, the assets moving higher. And this was the important one, I think, to note, is that the investment in the bull sector funds is still on the decline. So right now, I would say, you know, looking at I was looking earlier at an increase in the bear funds, but now we're starting to see a little bit of a decrease. But let's face it, you can come here in the thumbnail and there is a rising bottoms trend line, and it has not been broken. So I think you could still make a case that, you know, the bear funds are still seeing some action. What's important in this case, I would say, is this increase in the money market funds. That tells you that people are pulling away from the table. You've got, again, these bull funds, we're losing assets there, you know, so you're starting to see a shift into the money market or cash area. That shows some neutrality among investors. I've watched this particular, the bull bear ratio that we, the bear bull ratio that we follow. And I look for these rising trends, and I look for broken rising trends. And we're getting ready to break down from this rising trend. And, you know, when you see these breakdowns, let's see, we are in annotate mode. So let's go ahead and look at this. Here was a part where we got a breakdown, and we saw some decline. So I don't want to see a breakdown from the rising trend line. That typically isn't a good thing. And you can see right here, if you want to go rising trend line here, and you can see once it was broken, you know, we were still in some downside decline. We did end up with a huge drop, though, here, and that meant that we were getting a preponderance of bearish assets moving in. And so when you see that bearish assets moving in and at that rate, that does give you a hint that we might be looking at a possible rise. But right now, what I would be looking at is if we get that break below that rising bottoms trend, that tells us that we're getting more assets to the bullish side. And so we want to watch that closely. If we end up getting very bullish, again, that is bearish for the market as far as sentiment is concerned. So let's see. Let's go ahead and wrap this up as to what we have looked at. And, you know, I didn't go over the Vix chart just yet, but that's okay. Let's go ahead and take a peek here. All right. And that one, the Vix chart that I follow and the breadth, I find this to be also a good indicator of sentiment and what's going on there. And what I wanted to note, first of all, the VIX is sitting on its average right now as far as the Bollinger Bands are concerned. So I don't think we're getting much information out of the VIX except to say that people are getting more comfortable because the VIX reading is on the rise. What I found interesting were these climactic readings in breadth on the advancing side. And typically when I see those, I want to read it as either a buying initiation or a buying exhaustion. And, you know, I would have to say that had I seen this earlier, if I were to, before I knew what was happening with this bar, I would have looked at this as a buying initiation, mainly because we were moving mostly flat. And so I would have looked at this as a possible buying initiation, and that would tell me to look for what I like to call a rally pop in the next day or two. And we're getting that rally pop right now. So I found that to be very interesting. So now let's go ahead and summarize, and then we'll look at our poll to see where everybody is sitting. So like I said, if you look at what the right-hand side is telling you, I'm seeing bullishness across the board as far as the sentiment is concerned. All of these sentiment charts are really leaning to the bearish side. So that means that would be bullish for the market, because remember, sentiment is considered contrarian. So that's pretty much where I'm sitting as far as the sentiment update. Let's go ahead and see if we can't pull up that poll. And then Tom, when I finish this up, we did have some pretty interesting questions in the chat room I thought we might want to address. So currently, the majority by quite a margin is saying higher, mostly unchanged, next in line. What I find interesting is how everybody's feeling that next week it's not going to be lower, that we really have a low percentage of people feeling that bearish feeling, as I would say, the sentiment. So going into next week, it looks like everybody's going to the high side. I have to say, Tom, I will be joining the majority there. I think our sentiment charts are looking pretty good. We're not too excessive bearishness, but I think there's enough bearishness out there as far as sentiment that it could help fuel some upside movement next week. What do you say? What say you?
I like the S&P 500's bounce off the 20-week EMA. We had drifted lower after getting up near 2,800. We had drifted lower for a couple weeks, and now it looks to me like we're starting to turn back up again. I still see the possibility of some hesitation as we get closer to 2,800. If we can get through 2,800, I think the market really is ready to roll, because the NASDAQ looks good, the Russell 2000 looks good, and it's really these larger cap multinationals on the S&P and the Dow that have been so weak on a relative basis. So I'm watching 2,800 pretty closely on the S&P, because I do think that would be a tremendous sign for the market if we break out above 2,800. Really, you could almost look at it as an inverse head and shoulders off that January high. And if that's the case, the measurement would be up to about 3,050 on the S&P 500.
All right. Like I said, I guess we're all going in as higher as bulls for the next week. I send all of this, just by the way, to the Wall Street Sentiment Survey. Mark Young keeps track of that. If you want to learn more about that sentiment survey, just go to wallstreetsentiment.com and you can learn more about what is going on there. So I did say that we did have some rather interesting questions today in the chat room, so I thought we could cover just a few of them. The first one I'm going to address to you, Tom, and that was, the person in Barry says, given next week is poor seasonally, the drop in treasuries and August seasonality, do you think now is a good time to start to lighten up, except for the biotechs?
Well, next week really isn't that bad historically. The market tends to do pretty well heading into the middle of July, and then it's after that. July 18th through the 24th is among the worst weeks of the year historically. So I think we might have another week to go here, and like I said, I think 2,800 is going to be an interesting level to watch on the S&P 500 to see if we can get through. I think that would be bullish if we can get through. And one other comment I would make about next week, even though technically it's bullish and historically overall it's bullish, I will say that the 9th of the calendar month on the S&P 500 trails only the 19th of the month as the worst days to be invested in the stock market or in the S&P 500 dating back to 1950. So Monday is the 9th, and of course Monday is not a great week, Monday is not a great day of the week historically. So I would say maybe we see a little pullback on Monday just because that's a historical norm. But then after that, I would expect maybe we're going to make a run on the S&P at that 2,800 level. And I I'm bullish, so I'm really finding it difficult really to stay out of the market. I just think that maybe it's the where you're getting in, I think is important. And
well, that brings up the next question is defensive sectors. What are those? And I would have to say, based on what we generally see, consumer staples, healthcare, utilities, those tend to be on the defensive side of the market. So, that's an idea if you want to move to that direction, if you're feeling bearish. But generally you're not going to get a whole lot of action. I know we look at consumer staples all the time and not good.
Yeah, I would just also add to that too, that the XLU, which has been doing extremely well, by the way, last 3 or 4 weeks, utilities have been on a roll. They were down at 48 not that long ago, and now we're up over 53. So you can see it's been a pretty nice move here on utilities, and that's a hallmark actually of a bull market, wide participation. I mean, we don't, in bull markets, it's not like utilities and consumer staples and healthcare don't go higher. They just don't tend to go up as fast as some of the more aggressive areas. So I'm actually happy to see consumer staples beginning to rebound, utilities doing pretty well. I don't think they're going to be leaders in the second half of the year, but I am glad that they're beginning to reverse and head higher.
Yep, and there's that XLU chart. I see this double bottom, and it's executed. It's almost made its run to fulfill the pattern. But with patterns, I always say, we're looking at a minimum upside target. So we should reach that at a minimum, but we could certainly move higher past that. And yeah, utilities are looking quite good. The one last question, let's see, I wanted to show you BIIB. We were talking about that one earlier.
Mm-hmm.
And the person asks, could you comment on it, whether the gap will be filled? And I'll just give my 2 cents on that. Is typically you will see gaps fill, but this to me looks like a breakaway gap, and those don't necessarily fill that quickly. So we could see, further gaps to the upside as well. But the person wanted to know, would this be a good one to short just because we had such an extreme move?
Well, I think it always comes down to reward to risk. And I would say, I mean, I know it's hindsight, but looking at the chart, you've got resistance up near 370. So earlier today, when Biogen was up near 370, to me, that's where you want to short if you're going to short, not after it reverses and moves back down $20. I think now your reward to risk at this point is somewhat skewed. And just my own personal belief, I'm a fan of biotechs, especially during the month of July. I'm not going to be shorting any biotechs.
All right. That pretty much covers it. They did ask what our feelings are as far as the trade war possibilities and how that will affect the markets. Just from the news I'm reading, a lot of the companies are saying, it's, might affect 1% of my business, or it might affect this, or, I have international, companies out there that are producing, in Europe, and that might not be a problem. What do you think as we
Yeah, I just think you got to follow the charts. Industrials, materials really struggling, which is what I would expect, but the prices are telling us that.
Yep.
All right. Do want to thank everybody. It's another week. Can't believe another week's gone by, but thanks for being here with us. Please remember to complete the survey as you exit. We'd love to get your feedback. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe, and we'll see you back here on Monday. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.